Good day, everyone. This is Jack from the Stock Serpent Watchdog, and today I am bringing you an update on U.S. equity markets. We had a nasty week last week. Let's have a look using our 10-point checklist using the Ichimoku Kinko Heiyo trading system. This checklist will give us a good idea of where the U.S. equity markets are heading in the near future. These are daily charts. This one is for an entire year. So this is a 12-month chart. Let's start with our first point. All right, first up on our checklist is price versus the Kuhmo Cloud. Where is price trading relative to the Kuhmo Cloud? Well, price is trading right over here. On Friday, we closed at 2633.08. That is substantially below the Kuhmo Cloud. That gives us a negative check on that. Then, the second item on our checklist is price versus the Cumo Shadow. Now, where is the Cumo Shadow? The Cumo Shadow are all these points on the cloud that are behind price. Now, right now, the Cumo Shadow is definitely causing more resistance, and as of yet, I don't see any support for price at this level here. So that would also be a negative because it offers up resistance. Now, let me just chart that in to help everyone understand what I'm talking about. The Cumo Shadow, remember, is the Kuhmo Cloud behind price. That would be this flat area here. This is the Senko Span B that offers a lot of resistance or support depending on where it's trading. And look at that. That area exactly marked the top of last week's rally. Well, not the top of last week's rally, the top of Friday's move up. And it reversed from that point on down. All right, so that will clearly be a negative here. I am checking that as a negative. On our checklist, we have two bearish indicators on our checklist so far. Moving on to the third one. I'm going to go fast because I have a couple of other charts I want to look at before I sign off. The Tenkan-sen versus the Kijun-sen. The Tenkan-sen is this blue line. The Kijun-sen is the red line. Are they in bullish alignment or not? That means, is the faster moving average above the slower moving average? That is definitely not bullish either. Look at that. The slow moving average is on top with the fast moving average having crossed down below. That is negative right there. And we give that a -3. Fourth item on our list is price versus the Kijun-sen. The Kijun-sen is our intermediate midpoint moving average. It acts kind of like a magnet, and it draws price to it. Look at what happened here. Price rallied above. Look at that. It rallied above the Kijun-sen, this red line here. And what happened? It was rejected at the Senko Span B, which is the top edge of the Kuhmo Cloud. And then it got drawn to this red line, which is our intermediate midpoint moving average. All right, right now we are trading a little bit below there. It's not that far below. It's a couple of percentage points. For that reason, it is definitely a negative in my view. So price is pretty close to that midpoint moving average, and it can still fall a lot. Look at this. There's price right at the Kijun-sen, and it can fall pretty far below it. So right now there's still a lot of downside left here versus the Kijun-sen. All right, that's the fourth point. We are all red here. It's all bearish. Then let's move on to our fifth point and halfway point. The Tenkan-sen and the Kijun-sen, are they greater than the Kumo? No, they are not. They are trading. These two midpoint moving averages are trading below the cloud. That is another bearish indicator right there. So halfway through our checklist, we are all red. This is all bearish, ladies and gentlemen. There is nothing bullish going on here at all. Okay, moving on to our sixth point. The Tenkan-sen pointing up. Is the Tenkan-sen pointing up? That is this blue line. Is it pointing up? No, it isn't. It is, in fact, rolling over, and it looks like it's going to continue down. So I'm going to give this another negative check here. Why am I going with negative here, even though it looks a little bit flat? Because it's only been flat for 1 day. And it is definitely made some kind of top here, and it is rolling over. I'm going with a negative here. We're following the trend. The Cajun-sen. What is the Cajun-sen doing? Is it pointing up? It has, in fact, turned flat here. Now, the difference between the Tenkan-sen and the Cajun-sen is the length of time. The blue line is a 9-day midpoint moving average, while the red line is a 26-day midpoint moving average. They both take account of volatility of their respective periods of time that they are calculated in, but the red midpoint moving average here is obviously the longer term one. It is longer than the blue one, and therefore it is more significant. It has turned up a little bit here because of all this volatility, but it has now turned flat, and for that reason we are going to go with a neutral on that indicator. Okay, let me put it down here. There's a neutral, which just means that right now it's not giving us a clear signal at all. Then our 8th point, we move into the Chicago span. Where is the Chicago span trading relative to price? What is the Chicago span? The Chicago span is our closing price from Friday, charted back in time exactly 26 days. So there it is. It is right here at the bottom. Now, if you look carefully, it is interacting with price. This bottom wicket is interacting with it. And it is very, very close to breaking lower here. Okay, and I'll have a little talk about that in a second. But first, where is it relative to price? Now, because it isn't already clear of price, I'm going to have to give it a neutral indicator here because it is interacting with price. It is actively interacting with price, and that means that it is consolidating. And because it's consolidating, it is obviously not trending. Now, that is clear from this pattern. Look at this. This is highly volatile, and that is why it is interacting with price right now. But once we move clear of this price action here and here, we can, in fact, start a new trend in the downward direction. Okay, and if some of you think we're already trending down, yeah, we are, but this has been a very volatile consolidation. That's all it's been, and now it looks like we are getting ready to trend again. So the 9th point on our checklist is the Chicago span. This white line, is it greater than the Kuhmo Cloud? It is obviously not, and that is negative once again. Let's just change that to red. That's definitely negative. We are under the Kuhmo Cloud. The Kuhmo is way up here, and there's the Chicago span. Then finally, is the Chicago span future bright or is it gloomy? Now, to see if it's bright or gloomy, we have to look both vertically and horizontally. And as we look vertically, we notice that we are going to be in open space within a day. So no matter what happens here today on Monday, that would be December 10th. No matter what happens, ladies and gentlemen, this Chicago span will be an open space. Now, what is the significance of that? That is because the Chicago span is the momentum indicator of the Ichimoku Kinko Heiyo technical trading system. It tells us when something is about to trend. Now, just have a look here. When it broke out here based on this move, remember it's charted back 26 periods, so 26 days. So this is what happened. It moved down. Now it was an open space, consolidated a little, and then when it broke out, it started trending down, and this is the move we got. Now, if we clear this price action here, and there is nothing standing on our way to the downside, that means no price action down here, no consolidation. So that means that we are going to start trending downward, or at least there's a very good possibility that we can trend down, and therefore that would be negative or bearish. Then horizontally, we are about half a month away. Well, yeah, about 20, 21 trading days away from any horizontal price action. That means that we can trade sideways here up to about the start of the new year before we start interacting with price action and then consolidating again. So right now, we're going to be in open space. That is the message here that I want to convey. And because we're in open space, it means that it will quite possibly continue down here. So this, to me, is clearly a bearish indicator on our system. Now, having a quick look there, it is all red except for 2. That means we are 80% bearish on the S&P 500 on the close of trade on December 7th, 2018. All right, here we are with the Dow Jones Industrial Average 30. These are some of the biggest companies in the world, at least in the States. And now we are looking at a daily chart. This is a 6-month chart, and you can see it broke down. It looks a lot like the S&P 500. It traded up. It traded a little bit above the cloud. It could not hold above that resistance, and it broke back down. And it's technically just as weak, if not weaker right now than the S&P 500. The checkout span is just interacting with the lower wick here of this candlestick, and that means it's going to be an open space. I am expecting a further move down in the Dow Jones Industrial Average as well. Here we have the Nasdaq. This is the Nasdaq Composite Index. Now it is weaker, and it looks weaker than the other two that we just looked at, the S&P 500 and the Dow Jones Industrial Average. The Dow Jones actually managed to close one day above the Ichimoku Kinko, this cloud here, and it managed to close one day above. Look at this. The Nasdaq could not even manage a close above the lower edge of the cloud, which is pretty sad. All right, so there is obviously no real buying pressure coming in here, and that there is continual distribution. Look at these: lower, high, lower, high, lower, high. This is an indication of a bear market. And look at where my checkout span is. Same thing. It's exactly the same as the Dow and the S&P. And we are looking for a move further down here into the end of the year. All right. Now we are looking at a weekly chart. Now this is from the start of 2016. Look at this massive and beautiful bull run up. This is December of this year, 2018. We topped out at 2872.87, and we continued moving down. But look at this. Look at the difference in this move. Look at the difference. It bottomed well above the Ichimoku cloud. It bottomed well below the cloud, and then it continued to move up. We made new highs here at 2940.91, and then it continued down. Now, the difference between these two bottoms must be clear to everyone right now. All right? We are testing critical support in this Senko Span B on a weekly level. Now, this is very key. Look at the price action and the interaction with the Senko Span B here. Now, it draws it to it, and price just bounces up from this level. Actually, in the next week, it crosses the Senko Span B, which is a very significant, actually, it is the most significant support and resistance line or indicator in this Ichimoku Kinko system. Why? Because it's the slowest moving midpoint moving average, basically. All right, now because it's the slowest moving, it means it's the most significant. It's 52 days, and look at what happens. It finds support, it moves back up, everyone is happy. It actually crosses over the Tenkan-sen and the Kijun-sen, and then it fails. So again, what do we have here? We have lower highs. We failed and we made a lower high. We continued back down. Where do we find support? We find support exactly at the Senko Span B, the lower edge of this Kumo Cloud. Now, as long as we trade above this cloud, it is all still bullish, or at least neutral. If price action is in the cloud, it is neutral. If it is above the cloud, it is bullish. But the moment we close below this Kumo Cloud, it is bearish. Now, let's just look at what that lower level is. We closed at 26.33. What is the lower level of the cloud? It is definitely below that right now. So this close is definitely putting us in a technical bear market when we use the Ichimoku Kinko system. Why am I saying that? As soon as we have a weekly close below the cloud, that is a technical signal to sell or to turn bearish. That means that sentiment has turned bearish, and the next chart will make that even more clear to you. Now remember, this is the S&P 500. This is a large cap index, and that means that these are the 500 largest companies in the US. And this is our final chart that I want to look at. This is the New York Stock Exchange Composite Index, the NYSE Composite. Now, this comprises a lot more stocks than the S&P 500. And look at this weekly action. This is a weekly chart. This is the January high and the trade down, the move down on a weekly chart. Look at what happened here. We moved back up. This was very weak, and we made a lower high right here. And look at what happened. We moved through the cloud, and we've actually been in bearish territory using this system. Remember, when price is below the Ichimoku Cloud, it is bearish, and you do not buy this market. As long as price is below, you do not buy this market, and it is even more significant because it is a weekly chart and not a daily. So we are clearly in bearish territory here, even though the S&P, the Dow, and the Nasdaq has not turned bearish or decisively bearish on their weekly charts yet. We just looked at the S&P 500. It closed in bearish territory, but that was marginal. Look at this index, the composite index. This is considerably bigger and comprised of a lot more companies than the S&P 500, the Dow, and the Nasdaq. So this is clearly a much more broader index to view. Look where it failed on last week on Friday. We traded down. Now, this is not the entire move from Friday, but look at where it failed. It failed at the Kijun-sen. The Kijun-sen is a significant resistance area. It failed there, and it traded down. Now, another thing we quickly want to look at is we want to look at the Chikou span. The Chikou span is our momentum indicator, and it is just marginally above, trading inside the Kumo Cloud. Now, once this indicator breaks through the cloud, and that would technically be a close at roughly just under 11,900. If it closes above that on a weekly level, this will break out of the cloud, and that would be in what is called open space. And that means that the trend down will continue or will resume in force. So this would be probably the recognition week or the recognition day that everyone has kind of wondered about. All right, so this is where everyone's going to start talking about that we are technically now in a bear market. So you know beforehand when that's going to happen. That's going to happen when we have a weekly close or a significant daily move through this cloud. You should be able to see it. Remember, this is weekly, so It can change inner week. It can change daily, but at the end of the week on Friday, prices are closed, and we'll have a permanent permanent data point right here. All right, so that is what I'm saying here. I'm saying things look bearish, and I would not recommend anyone be long in this market right now. It is treacherous, to say the least. So please, ladies and gentlemen, there are a lot of people out there who say that, well, we're buying value here, that this is a buying opportunity, and that there's going to be a Santa Claus rally. Even if there's a Santa Claus rally, that is not going to be significant enough to reverse this price action here, this negative move down below the cloud. We are technically in a bear market now, in the broader market, and we are simply waiting for the S&P 500, the Dow, and the Nasdaq to follow suit. All right, so you have been warned. This is Jack the Stock Serpent Watchdog. Please subscribe to my channel to get updates, and like this video. I appreciate any and all comments. Please leave them down below. And good trading, and please be careful in these treacherous markets.